Nitin Rakesh of Motilal Oswal Asset Management has joined in. Other experts will follow. Nitin, morning. First, what have you made of this? These kind of interest rate hikes? SBI, HDFC Bank, the big banks. Do you think it affects or harms the earnings picture 2 quarters down the line in any significant manner?
Morning, Udin. I think this is kind of a reaction to the 50 basis point hike by the RBI last week, and also keeping in mind that they're anticipating another 50 basis points for the rest of the year. So rather than, keep reacting to the RBI moves, I think larger banks like SBI and HDFC has kind of taken a stance and said, okay, let's just get this out of the way. Clearly, I think the hike has been sharper for SBI because they had some market correction to catch up with, given that they also had a change in management, and hence there might be a stance change. We need to wait and watch how that pans out. Our view is that at least given what we are seeing, I think the environment for rate sensitives, especially banks, if anything, is likely to get better going forward, given what's happening in the global markets, especially on the commodities front. So I don't think, while this seems like a big move on both lending and deposit rates, but I think margins probably will be in the range that Ashish mentioned for HDFC, and even for SBI, we don't see more than a few basis points of impact, if at all.
Hi Nitin, morning. Has the turf for the equity market changed though ever since that surprise RBI move of a 50 bips rate hike?
I think in the very short run, yes, there was a reaction, primarily because the consensus was veering more towards the 25 basis point hike. But I think RBI's view was that we need to do something a little more forceful and affirmative. So, and I think again, if you see some of the other central banks in emerging markets, they've been a little ahead of the curve in controlling inflation, and I think we've been behind the curve and more reactive in nature. Purely given the fact that it surprised us, continues to surprise us, week after week. So I think it's all in the price as of now. Market has still kind of kept the bottom around 450, 450, 5500 on the Nifty. We don't think that should get challenged anytime soon. Again, primarily because given that most of the bad news is already in, I think it looks like we've kept the trading range intact, 58, 59 on the upside and 54, 55 on the downside. And I think now the next cue has to really be what's happening on the global front, what's going on with the liquidity issues, and how the monsoon pans out.
But you would say we're unlikely to pierce that 6,000 mark in a hurry?
Well, again, I think for that to happen, we need to have a much clearer picture on the fact that the interest rate cycle has peaked, because I think that definitely puts a cap on appetite for equity, earnings momentum. I mean, inflation has eaten into a lot of the margins for especially the rate sensitives like autos and to some extent banks. Clearly, there are other segments out there, but I think until such time that we have a clearer picture on the inflation, interest rate, and global liquidity front, I think we may actually stay within the range. Obviously we can breach it by a few percentage points on either side, but broadly I think this really is a consolidation phase that gives you tremendous opportunities to kind of pick stocks as and when the news flow keeps coming in.
What do you make of tomorrow's event, Nitin, the assembly elections? Is it relevant for the market beyond just a sentiment trigger, or do you think it's material?
I don't think it's that material, given that most of the expectation is already in the prices, based on what people have seen on the exit polls. I think clearly there is an expectation that the communist parties will not come back in power in West Bengal. I mean, that's more a sentimental issue. It remains to be seen whether that will have a material impact on Congress's policies at the center. Again, Tamil Nadu, change is pretty typical of the cyclical change that we've seen in that state over the last few years. So I don't think there's going to be any material impact. I think the key thing really is, does this give the central government a lot more teeth for reforms, and can they then push through things that they haven't been able to push through in the last 2 years? And I think that will obviously be a much more than a sentimental move, because that's something that a lot of global investors and a lot of domestic investors are waiting to see, whether it is the oil pricing. And again, we've seen constant postponement of the whole oil pricing issue based on the assembly elections. I think some of those things might start getting executed based on the fact that this event will be out of the way. But other than that, I think we don't expect any major impact on the market.
Whenever that EGOP meeting happens, Nitin, and we do get some kind of price hike, do you think the market will celebrate that, the fact that prices have gone up, short of any major policy overhaul? Or do you think it might say it's just ad hoc price increases and anyway it's stoking inflation, so why should there be a huge sigh of relief?
I think there'll be a sigh of relief in some corners, especially if you see the OMCs getting a lot less impacted. But I think beyond that, unless there is a major policy change, it will be short-lived. Clearly they're talking about looking at LPG and kerosene, and I think that obviously will be a bigger cheer for the market, especially the OMCs, considering that to some extent that will not stoke inflation directly versus vis-a-vis diesel. So again, I think it's a catch-22 for the EGOM. There's no easy answer. It's a politically hard decision, and that's probably the reason it hasn't been taken over the last few months. And clearly, unless they really come out and do one big move and say, okay, we actually are moving to decontrol the pricing, which they've made noises about over the last few months. But until that happens, I think it will really be very stock specific, very event specific.